When many people hear ESG, they think about sustainability reports or even carbon emissions, corporate social responsibility. But for insurers, ESG has become something much more important. It's influencing where capital is invested, which businesses receive funding, and even how risk is priced. Today, we will explore why ESG has become a capital allocation issue and not just a reporting one. First of all, hello everyone, my name is Diego and welcome back to the channel. Here we are going to explore quite a bit of insurance finance, capital allocation, FP&A, and strategic decision making, okay? This is the final episode of our capital series. Over the last videos, we've explored ROE, economic capital, reinsurance, IFRS 17, expense allocation, and capital consumption. Today, we're bringing everything together by looking at how ESG is influencing capital decisions across the insurance industry. To kick off things, ESG has moved into CFO's agenda. A few years ago, ESG was often viewed as a responsibility of sustainability teams. But today, well, it's firmly on the CFO's agenda. And why? It's because ESG increasingly affects financial outcomes. Climate risk can change underwriting performance, governance failures can damage company value, and social issues can affect customer trust and long-term profitability. And as a result, finance leaders are now asking, how do these factors influence where we allocate capital actually? That's the question they ask. Now, how ESG affects capital allocation. Let's look at 3 examples here, okay? The first being investment portfolios. Many insurers now evaluate investments not only on expected returns but also on ESG related risks and long-term resilience. The second one being underwriting portfolios. Insurers are reassessing exposure to industry and regions that may face increasing environmental or transition risks. That doesn't mean to say that they are going, off from those risks. They are only pricing those risks adequately. The third being strategic investments. Companies are directing capital towards technologies, data capabilities, products that involve resilience and support long-term value creation. Do you notice something here? Every example involves allocating capital more intentionally. ESG is about risk, not just values. What I mean by that? One misconception is that ESG is purely about ethics. In reality, for finance professionals, it's primarily about understanding risk and opportunity. If climate events become more severe, if regulations change, if customer expectations evolve, those are financial issues, okay? Ignoring them doesn't eliminate the risk. It simply makes the business less prepared. That's why many insurers now integrate ESG into enterprise risk management, capital planning, and investment decisions. What this means for FP&A? That's the golden question here, right? So for FP&A teams, the role is changing. It's no longer enough to build forecasts based on historical data only. Finance professionals increasingly need to consider climate scenarios, regulatory developments, long-term investment risks, strategic resilience. This doesn't replace financial analysis, of course it doesn't, right? But it strengthens it. It makes it way more stronger. The goal is to help management make better long-term decisions and not just quarterly decisions. Now, let's try to bring the capital series all together here. If you followed this entire series, you'll notice a common theme. Capital isn't just about having enough money. It's about allocating any scarce resource to create sustainable value. We've discussed why growth can reduce ROE, why economic capital matters, how reinsurance improves capital efficiency, how IFRS 17 improves visibility, why expense allocation influences decision, why different policies consume different amounts of capital. And now, why ESG has become another input into those same strategic decisions. That's the evolution of modern insurance finance. Okay? Now, to close off things here, is there like, if there is one message I'd like you to take away from this capital series, is this: the best finance professionals don't simply report numbers, they help organizations allocate capital better. Whether you're working in FP&A, actuarial, accounting, investments, or strategy, understanding capital is one of the most valuable skills you can develop. If you've enjoyed the series, I'd really appreciate you to subscribe to the clinic and share the videos with your colleagues who work in insurance or finance. And I'd love to hear from you in the comments. Which topic from this series changed the way you think about insurance finance? Thank you for watching, and I'll see you in the next series. Cheers, bye.